We are live yet again, baby. If it does not say live in the bottom right hand corner of your screen, unfortunately you are watching the recap. Go ahead, click back on the main channel, refresh the page, and get yourself on the live stream that currently is live, baby. How are we doing? How are we feeling today? Are we feeling good? We had the Fed minutes, we had some economic data in the markets. Went a little bit crazy. I mean, you had a pretty big round move, which we have not seen in a fairly long amount of time. Once we hit that 10-minute mark, we did start to sell off in a pretty big way. So we got a lot to talk about heading into tomorrow. Some more data that comes out, which will be important. But yeah, today was not good. Not good at all. So I hope we're doing good. I hope we're not getting lost in the sauce here because, I mean, we still got potentially a long way to go. So how are we doing? Ugans, me too. Summer, salute you too, brother. Yo, Dan the man in the building. Massive Zen. What is poppin'? Apes in the building. Hello. Goonie, hey, how is everyone today? I hope we're doing good. I hope we're having a blessed day. And we're ready for what the markets throw at us, baby. Because it's getting a little crazy. I hope you guys liked the analogy from earlier, too. If you guys have not seen the video. The analogy is, this is the stock market just summarized for you, right? So my girlfriend, like, she can't swim. She'll lie to you and she'll say that she can swim. She's over here like, yeah, she probably don't like me because I'm saying this, but she can't swim. So, and she's like 5 foot. Like, she says 5 foot, half inch, but really, let's be honest, she's 5 foot, okay? So she'll have her head out the water trying to swim. She can't touch. And she's trying to look cool, calm, and collected up top. Her head under the water. Then paddlers are going, right? That's what's happening to the markets right now. Those paddlers, the markets are freaking out under the surface. Yeah, at the surface, we're trying to stay cool, calm, and collected. We're not seeing 2-3% up and down moves. But do not let the surface fool you. Eventually, my girlfriend would drown if I was not there. Okay? That's like the stock market. Eventually, we will drown or fall, whatever, if that's not a good analogy. But yeah, I still gotta teach her to swim because we can't be having that. What if like the boat sunk or something? Like, girl, I can't. Yeah, so stock market, that's the analogy. Just think of that. Like, it's perfect. Because eventually, I mean, it's like what would happen to a person that can't swim. Eventually, you drown. Alex needs some floaties. Dude, I'm getting her some. Vlog, that was a great idea. I didn't think about that, honestly. But that's a really good idea. At least until she learns how to swim. I mean, I'm like a really good swimmer. So it really took me off guard when she said she couldn't swim. She was trying to play it cool. She was. Yo, Jennifer Hendricks, what is going on? And you are really blasting me out here. Well, it's a great analogy. Yes. What's up, Tyler? What's good? Cheese chaser. Chasing the cheese, huh? She might need to save your ass. Just kidding. Yeah, that would be the day. Like a badass one, please. Maybe an avocado to lay on. No, we're talking about the arm floaties for children. Okay. Not something where you can sit out and drink your drink on your floaty. No, we're talking about armbands. Little, like, kid shit. So you can learn how to swim. From the wild, wild west of England. Y'all be getting wild out in England? I like it. Turn up, baby. Have some fun, but be safe. And invest in yourself and get that portfolio. A lot of good stocks to buy out here. Don't be turning up too crazy. You know, dollar saved is a dollar earned in this market. That dollar goes far. Big Blue CNC, how are we doing, baby? Yeah, it's been a minute. We were wondering, where's Big Blue? But he's here. Looking good and all with the wrench. All you mods, shout out to mods. Just rocking the wrench. It looks so good. It does. And if you have not been told today, you are beautiful. And your portfolio is not determined, shouldn't determine your self-worth. Because if that was the case, then we're all fucked. Okay? But yeah, dude, we got economic data coming out tomorrow. Very exciting. ADP employment change. We're expecting about 128,000. Depending what we get, that'll obviously be pretty important, believe it or not. If this does go up, it'll probably be bullish. If it continues to come down with the 2022 trend that we have seen, probably not going to be a good thing. The balance of trade for May, the trade deficit, that's the most important catalyst coming out at 8:30 in the morning. And that's really going to be the main headline, right? If we see we're getting an even larger trade deficit, it's not going to be a good thing for a recession, right? So that's really the two main things. You do have Fed Wallard and Fed Bullard at 1 p.m. Now, okay, listen to this. So what is happening right now, and we'll just keep this simple Econ 101. We won't even go into currencies too much. And that's really where things get a little bit deeper. Currencies are just next level shit. Like, you got to understand macroeconomics pretty good to understand currencies and how they affect the markets, which that is key. US dollar has been rallying, and that just means global currencies are devaluing. People are afraid of a recession, and not just an American recession, but a global recession. So what you've gotten out of the Fed is aggressive, right? 50 to 75 basis points. That's what the Fed told us they expect to do at the next meeting, right? And they see more restrictive policy as likely if inflation fails to come down. So they're basically saying right here that, dude, we're going to do whatever we have to do. We're going to go to 5, 6, 7, 8, 9, 10% interest rates until inflation comes down, if that's what we have to do. That's what the Fed is saying right here, right? Let's be real. That's what they're saying. And so what you're actually seeing in the markets is the yield curve inversion. Bad spending data coming out. Negative estimated 2.1% Q2 GDP report. You're seeing the bond yields dropping. You're seeing the dollar breaking out to new 2022 highs, right? That is pricing in a recession. Think about it like this. If the Fed is raising rates 75 basis points every month and a half, 2 months in 2022, likely throughout the rest of the year, why the fuck is the bond yield falling? That should not be happening. This is not what the Fed wanted. Think back to the Fed meetings. I'm not sure, how many people actually watched the whole thing and listened to the whole press conference. But when reporters are asking about a, recession, about the markets in general, the Fed and Powell basically always comes back with the markets are appropriately pricing in Fed policy. They're appropriately tightening financial conditions, and that was the 10-year treasury that has just continued to go up, right? When you can get a guaranteed almost 3% yield in US treasuries, you're not going to lend out money for even close to 3%. Whereas if you could only get like 1% in 2021 or even 0.5% at points during 2020, everything else is going to be super cheap, like a mortgage, a car, anything else, right? So you shouldn't be seeing this right now. Long story short. So either these Fed speakers over the next coming days and weeks are going to get a little bit more dovish, and they're going to say, hey, maybe the markets are right. Maybe, we should listen to the markets so we don't go into a deep recession. Or the Fed's going to say, yeah, no, screw that. We got to do what we got to do. And they continue to raise rates, and the markets disagree until something does break, because the markets are disagreeing with the Fed right now. So that's just really the strangest thing that I've seen in a very long time. Is the markets being relatively chill, like up or down 1%, 2022 speaking, that's relatively chill, when the markets are completely panicking under the surface. I can't say I've seen anything quite like this. And I think it's going to mean more downside. But I do believe win bottom. Yeah, I know, right? I do think the bottom is probably around the corner, because I do think we will get a flush out event. And I do think we're going to see margin calls. I think you're going to see shit really hit the fan. Like in a pretty big way. All these indicators we're looking at, the further disconnected we get from Fed and markets, right? If the markets continue to price in a recession at the same time the Fed is continuing to raise rates that aggressively, well, what's going to happen? The 10-year Treasury has come down. Well, the 10-year Treasury will have to skyrocket back up once we realize the Fed is serious here. That's why I do think there could be some real downside here in the next couple of days, next couple of weeks, possibly tomorrow. But I think the bottom comes likely in August. You get the next Fed rate hike, and then you get GDP that comes out the day after that, the 28th, and then you do get company earnings in between that time period. If we get earnings estimates that come down, well, that's going to push down the fundamental value of these stocks, the markets, and push us down to those lower levels. And I think we're like 5 to 10% of a downside move under that 360 level to seeing a lot of margin calls. I think it would be way too hard to hold up negative down 40% in the NASDAQ without seeing a big flush out event. I think that would be a quite a damn feat, even for U.S. equity markets, which can be pretty irrational sometimes. So I do think likely in August is when you see a bottom, but it's not going to be a quick recovery. So that's a beautiful thing, because you guys can continue to load up and really make your money on the upside. I need armbands for this market. Dude, I do too. Man. I am down, dude. I don't even look anymore. To be honest, I buy, then I just don't even look. My average cost on Square is $65. And sometimes I'm positive, sometimes I'm negative. But it's dude, you gotta be getting tapped out on the sellers here. Once we see a big flush out event, you're going to go down lower. Wouldn't surprise me if Square goes as low as $35 to $40 a share. That would just be insane. But yeah, I do think bottom July, August. Yeah, something's gonna break, right? So this should be pretty easy for anyone to understand. But the stock market was hitting new lows as the 10-year Treasury was hitting new highs, correct? The low of the stock market actually came on June 17th. June 17th, right? We peaked out in the bond yields on June 14th. So around the same couple day period, we were actually hitting lows, and I believe during the S&P during that time, June 14th, we were pretty much at the lows. We did come down at about another 0.5%, 1% after the bond yields peaked. But by and large, you really started to fall through the floor after that CPI report, after the Fed raised rate 75 basis points. Got pretty bad in the markets there for a second, right? And the bond yields, they were appropriate. They went up about 0.5% because the Fed just raised rates 75 basis points. And that was like normal. Well, the markets, they're fearful about a recession, so they have fallen from 3.5% down to 2.991%, which we've established that already here in this live stream. But my point is, the markets have been correlating to bond yields. Bond yields go up in a big way. The stock market was down in a big way that same day. Well, look at what we're seeing right now. If the Fed continues with this policy, the bond yield has to go up at least another 1% in a very short amount of time from here. Has to, right? We're at 1.5% right now. So if we even get a 75 basis point, I mean, you're going to be 2.25%. Bond yields under 3% doesn't make any sense. That could cause a flush out of that, but so I have 3,500 loss causes. Yeah, I don't even look. Yeah, I up my weekly auto spending on the stocks. I have to average down. Yeah, that's not a bad move right now. I mean, you've been in the damn gulag. Like you've been getting just absolutely destroyed if you've been in equities, like pretty much at all. But on a lot of high growth stocks, like a Fubo is down 95% in 2022. Like it doesn't even matter when you bought the stock, you're clapped. A lot of stocks are like that too. I remember I was buying DraftKings in the 20s and 30s. That thing's at like $12 today. Snapchat, I was buying that thing like crazy. Every time it would dip in the 20s. Now that thing's at like 14, 13. It's actually quite crazy. But it's good because this is where the opportunity comes in. As long as you can stay in your positions, as long as you don't get hit with a margin call and you're forced to get out, you're good. AMC and GME, please. Yes, I got you right now. It says Russia-Ukraine war coming to an end soon. Oil falling. Young Biden falling off a bike. Things are getting better. Yeah. Well, see, it's actually like it's kind of weird what's going on with Russia and Ukraine, because one second it seems like, you know, people are talking about Russia's going to stop after they take the whole Donbass or whatever, right? The whole like eastern region of Ukraine. And then there was a headline today that said Russia mobilized its economy for like a wartime effort. It's like there's kind of a mixed bag there. So I don't really, that's really hard to tell. That would still be the single most bullish thing besides the Fed U-turning, but I mean, I think that could be a pretty negative event as well. Probably the single most bullish thing that could happen to the markets right now. I would firmly expect to see a massive green day. If we did not see a massive green day, I think I would load up on calls at that point because the markets are confused. You know, price of oil would fall in a big way. But oil falling is directly due to the fear of a recession. That's all it is. That's the only reason why oil's falling, is because the markets are getting fearful about that recession. Mentioned drip a month ago. Look at it now. Oh my gosh. Don't tell me. Don't even. What? Holy shit, dude. You're kind of nutty with it. That's great. Yeah, that's a damn good move. $13 at the low. Now it's trading at $27.60. I bet those options were pretty cheap too. What's the value just getting in here? So I have a question. Is tomorrow going to be a super bad drop for all stocks over fear? I'm reading from notes, gaming, looking at the camera. Young Biden. Oh, young Biden. um, I I I don't know if it'll be necessarily tomorrow. Unfortunately, like, I mean, it's pretty bad. Like, it's really bad. The fact that the markets are acting so discorrelated, so not aligned with the Fed. Like, the Fed and the markets are on two different pages here. Markets are like recession, Fed's like inflation. There's no good outcome to that, no matter which way you put it. Unless the war in Ukraine ended and the Fed could come out and say, hey, and inflation's going to come down naturally. I think we can ease up raising rates. We can avoid a recession. We'll continue to raise rates, but we'll only raise rates at 0.25%. We'll go back to normal. That would be like the smoothest soft landing I think you could possibly get at this point. We're not going to have a soft landing, but that's the smoothest landing we could get. That's if the Fed took that step, the war in Ukraine ended. Very unlikely, right? That's the best case scenario. Worst case scenario, obviously, is pretty bad, but it doesn't have to be like tomorrow or the next day that the markets finally, realize this. We're really subject to the data that we get, and I don't know what the data is going to come in as. The ADP employment change for June expected 128,000 new ads. If we get something potentially negative, that could actually be a good thing for the markets. But it's hard to say. That comes out at 8:15 in the morning, and then you have the balance of trade at 8:30 in the morning. That's important for a possible recession. So that's going to really be what dictates the markets. But theoretically, you should have had a pretty bad day today, right? Like, the fact that bond yields are not showing that they're up more after what the Fed said today is alarming. Like, the Fed said basically no matter what happens until inflation gets down, we will continue to raise rates. The bond yields not reacting to that is saying pretty much the markets are calling the Fed's bluff. They're not playing along. We're not tightening financial conditions in the way that we should be. And even the bond yields jumped like 11 basis points today, which is a pretty decent move. I mean, going from 2.80 yesterday to 2.915 today, pretty decent move. And the market's actually rallied. Usually, if we went up 11 basis points, almost half of a normal rate hike of 25 basis points, then you would expect to see stocks down about 1%. You were up 1%. The markets are discorrelated as all hell. And that's why some growth stocks have been doing so well. Also is because when there's a recession, when growth is not there in the organic economy, when growth is negative, then investors buy growth stocks or really good dividend stocks that can outpace any inflation or weather any downtrend. But for the most part, growth stocks perform very well during downturns economically because there's growth, right? The company's growing at 25% with a 1 or 2 PEG ratio, then does it really matter if you're in a recession? Probably not. That's why you have seen growth stocks perform well over the last couple of days where the markets have actively been pricing in a recession. So might be the season of the growth stock if we do go into a recession. But it's just not good. But I wouldn't make any call from this point, though. It's very possible that bond yields go up tomorrow and stocks go up tomorrow. Shouldn't happen. Now, when bond yields go up like 25 basis points in a single day, yeah, markets are probably going to take notice of that. They're probably going to trip out. Thanks for all you do, TCI. Thank you for always being here and showing love and being positive. Thank you. Dump selling off other stocks is just a pump and dumps every day. Yeah. Market makers and hedge funds. When I watch the S&P 500 and I have the options pulled up for the unusual options flow, uh, it comes in real time. So every second there's literally an option usually coming through. You can see when the markets start to fall like when you get a couple good candles and the markets start to fall in a pretty good way, you can see all the puts coming through like crazy. When the markets are ripping like we seen today, you tend to see more calls going through, right? So a lot of this is actually just options and the market makers hedging for whichever direction at the time. Was the Funk Crow Joe song like Funk Trump song? I don't know. That's for a nice clean rip to 10. QuantumScape. Yeah, that's I mean, I would just be careful still with like a lot of stocks that have no path to profitability. It's going to be tough. That's for sure. Yo, Mr. Simon. How are we doing? Roblox calls were fire, now looking for puts, maybe September, October. Yeah, it's not a bad idea to maybe get some longer dated puts for sure. Getting into GME tomorrow. Yeah, that could be good. I see in the whole split thing. I wonder if it'll do much for AMC or if it'll just be one of those where it's, GameStop only gets the love or how that'll play out. Starbucks a good dividend stock? What does Starbucks pay? I like Starbucks. Like I like going there, obviously not every day, but I like going there and trying some cool shit or getting a cake pop. So Starbucks is kind of one that I do like a little bit more. Dividend 49 cents. What is that? 96 cents a year. The stock price is what's it at? 78. 86 divided by 0.96. Oh, did I do that wrong? Am I tripping? I'm tripping. It's roughly, it's like 2%, ain't it? My math skills are terrible. Yeah, that's not the right way to do it. I don't know. I think it's like 2%. It's not terrible. It's just like what's the growth rate? If you really go into recession, like will people cut back on Starbucks? That's a good question to ask cuz dividend is great and all, but it's really a balance between what are you getting paid out and what's the growth like. Because if you're only getting paid like 2% off of Starbucks, maybe it's less than that, but how do you pass finance class? It's been a while since I've done it on a calculator like that. Okay, but yeah, if Starbucks is growing at a good pace, then still could do well, but just depends what you're going for, honestly, when it comes to a dividend stock. If you want a lower yield, usually with the dividend stock, lower yield means more growth in the company. Higher yield means less growth in the company, typically, unless the, you know, some good monthly dividend stocks. O is one of them. Check it out, Tyler. What do you think? Yeah, I do like O. I do. Is that like 4 or 5%? Yeah, I have a couple shares of Starbucks too. I just like the product. So it's kind of one of those things, like, if you think it'll be around for a long time, which I do think Starbucks will be around for a long time, and it's not like a super risky business. You could like a business, but if they're just not there, if they don't have a good profit margin and they're risky, like economic conditions, something like a Starbucks that could be affected by a recession or something, something to consider. But I do think Starbucks is really good overall. You guys are like helping to solve the solve the question. No, I think it's like 1.5 to 2%. Because it's, I mean, 1%. If the stock was $100 and you got paid out $1 a year, that'd be 1%, close to $1, right? So that'd be 0.96%. And then say $75, you're gonna be up almost another 25 cents. So it's like 1.3%, roughly. Yeah. So Conagra Brands is a good dividend stock in the food sector. Yeah, I do like Conagra Brands products too, for sure. They make like the healthy bowls. I don't think they're that healthy, but that's like what they're called, healthy choice. And you pop them in the microwave for like 4 minutes, take it out, mix the sauce in there. You got a whole meal for like $3.50. I actually like it. But competition is fierce. Yeah, for sure. They're Starbucks cake pops. I wish they weren't so expensive, but oh, it's 2.41%. I mean, that's a lot closer to good, you know. Like 3%'s good. Um, Anything over like 5%, you kind of gotta like question, why are you getting paid so much. Usually a high yielding dividend stock is like a dividend trap, something that is unsustainable, or an issue going on with the business, like, because it didn't always pay 10% or 15%. So why does it pay out 10-15% now? Why is the stock down so much? In this market environment, I could see why you could get a 10 or 15% yielding dividend stock, just because everything has gotten beaten down. But that's the question you really got to ask when it comes to dividend stocks. And then what you're looking to do. I mean, because if you get paid out 2%, but the stock falls, I mean, you guys look at some 5-year charts. A lot of stocks are negative on a 5-year basis. Even before all this, before COVID, a lot of stocks were down still on a 5-year basis. So it's like, if you only want to hold it for 5 years, anything can happen. If you're not gonna see growth in the company, well, you could still lose money with dividends even included. Like Kinder Morgan's dividend despite price. Yeah. I own 2 dividend stocks. UWMC, and they're based in Michigan. They're like, where it's UWM. they do like mortgage originations, like selling loans and stuff. And they pay a really high interest rate now. When I bought that stock, it was like $6, and now it's like 3 or 4. But yeah, they pay out a lot, and that's not really that safe. But if you're already down, you're down. And then my favorite dividend stock is Abivai. Like, by far, this is the best dividend stock, in my opinion, out there. I believe you can still get like 4 something percent. Pays $1.41 per quarter, $5.64 per share. Yeah, this thing pays out almost 4%. And it has growth in the business. Like, they own Humira, they own Botox, they own many other drugs you'll see on like commercials. If you guys watch TV, pay attention to AbbVie, and there's like a lot of commercials about AbbVie. They have a lot of big drugs upcoming, and they own, I mean, the number 1 selling drug in the world, which is Humira. And then also Botox. I think that speaks for itself. I don't think Botox is going away anytime soon. Fire. 4% yield. Yeah, I gotta go with more Abivai for sure. Warren Buffett stock. Yeah, I've owned this way before Warren Buffett invested in it though. I've owned Abivai when it paid less than $1 per quarter. They increase their dividend all the time too. So their dividend just jumped up to 1.41 or $1.41. Their dividend for the last quarter of 2021 was $1.30. So it just went up 11 cents. You know, dividend back here, you know, $1.18 for Q4 2020. Q4 of 2019, they paid out $1.07. And then, you know, when I first bought Abivai was back here 2018, 2017, and they only paid out 96 cents per share, Q4 of 2018. So you have almost seen a double up in just the dividend payment per quarter in the last couple of years. That's a stock I want to own that consistently raises their damn dividend. Over 50% dividend. Yeah, you just got to be careful. You know, something that's like a 50%, you know, dividend is, you got to question it. How are they paying that out? What's wrong with the company? Because, like, that should never happen. If you can get like 3%, that's not terrible. And still have some degree of growth. Not terrible at all. Oh, Celsius is an upcoming growth beverage that is everywhere in grocery stores and gas stations. Tastes really good. Stock is doing really well too. I have not tried that, but I've seen that in stores now. It's like brand new. I've seen it. I'll have to try it. Is that what the stock is? Celsius? That's like the crypto exchange, bro. You know, Celsius Holdings. What? What the hell is the market cap on this thing? Oh, 5.8 billion.
Thoughts on CFVI with its cloud service? Speaking of growth, I CFVI, that was the SPAC, right? That turned into Lucid. I don't know what other new ventures they have, to be honest. Yeah, pharmaceutical companies are raking in the dough like nobody's business. They get paid regardless. But yeah, thank you guys for tuning in. I appreciate all of your beautiful souls. Tomorrow is going to be a very important day. Watch that data around 8 o'clock in the morning, 8:30 in the morning. You're probably going to see pretty decent moves, one direction or the other, especially due to what the Fed said today. The markets are disagreeing with the Fed in a pretty damn big way. So watch all of that. The biggest thing, if you want to watch to see really the fear in the markets and how bad the situation is getting, just overlay the S&P with UUP. And if UUP and the markets continue to go up, well, you're getting pretty damn far up Schitt's Creek at that point. So pay attention to that. UUP, if it continues to break out to new 2022 highs, well, yeah, you're pretty far up Schitt's Creek at that point. That's not good. So there you have it. Thank you guys for tuning in. Appreciate all you guys. Like button, subscribe to the channel. Free stocks down below in the description. If you want to come trade with me live in real time, link down below in the description as well. But that is it. I will see you tomorrow.